is Pushkar Mukewar. I'm the co-founder and co-CEO of Drip Capital. We are a digital trade finance company, and our focus is really around providing credit access to small and medium-sized businesses in emerging markets, with India being a primary focus. We've been operating in India for about 4 years. We work with a number of small and medium-sized exporters across multiple sectors. Agro commodity exports or agro exporters is a major focus area for us, given that that's also one of the areas in which SME exports from the country sort of dominate. Today, we are a team of about 140 people spread across 3 countries and 5 offices. Over the course of last, I would say 4 years, we continue to work with over 700-800 exporters. I would say a significant portion of them, are in agro commodity exports. We work with exporters who are into shrimp trade, chilies, rice, frozen meat. So we see a variety of export commodities particularly on the farm and agro sector, which are exported out of India. So I would say that, while if you look at the data from March or April onwards till June, we've definitely seen a remarkable recovery in terms of absolute volumes, which are getting exported out. I think our take is that a lot of this volume, which is getting shipped out in June and July, is essentially pent up orders, which were not basically getting shipped out because of the lockdown and supply chain disruptions in the country during April and May timeframe. So a lot of those orders actually got shifted to June, and hence we are seeing that demand or export volume in June has picked up. However, I would say that only the medium and long term, perhaps by Q4 of this year or the October, November, December quarter of this year is when we would really know whether we are past the corona crisis and whether demand for exports in general is picking up. I would say agro exports probably, in our view, are going to be lesser impacted than some of the discretionary spending items. India is a major exporter of, for example, products like ready-made garments, where the target market is mostly US and Europe. And those segments we think will take a far longer time to recover than exports in the agro commodity space and farm space, where these are more essential, non-cyclical product categories, where the recovery is likely going to be faster. So I would say, as you rightly pointed out, the government has introduced certain measures which are all steps in the positive direction. So the recent relaxation of the Essential Commodities Act, where the minimum guaranteed price has been lifted and farmers are now directly selling to traders, who are more likely going to also export, which would result in increased export volumes, along with freight subsidy, which has been launched under the Transportation and Marketing Assistance schemes. I think these are welcome steps which will help promote exports. I would say also some of the introduction of state-led incentive agro export schemes also are again welcome measures. I would say that from a longer term standpoint, though, more sort of focused and efficient implementation of schemes where the focus is really around, building capabilities as opposed to subsidies would be the right way to go, right? So areas like helping exporters actually connect with buyers, find buyers overseas, let demand meet supply would be important. Major improvement in logistics, has to be, I think, a big focus area. Investments in research and development, so that the Indian agro exporters actually focus on more value-added products rather than commoditized products is going to be a focus. It should be a focus. I would say also focus on organic produce, and actually making stricter phytosanitary norms, which is, I think, a requirement when it comes to exports to markets like the EU, would also help Indian exports, perhaps capitalize on the opportunities which exist. A lot of the exports which happen from the country across various agro commodities are essentially products which are sold in pre-processed form, right? And a lot of the value addition happens oftentimes in the outside markets, right? And that is why I think, focusing more on generally on building or on shipping out value added products becomes a big focus, right? Like there are very few Indian sort of example food product brands which are marketed globally. So oftentimes what Indian exporters end up exporting is actually packaged and processed outside by other importers and then sold at a significant premium in those markets, right? So of course, the specific technologies which need to be added or need to be introduced vary by the product type, right? However, moving much more up in the value chain and really sort of not only manufacturing but processing, packaging, and marketing products which are sort of closer to the end product would be the way to go. And this calls for, of course, investment in technology, investment in capabilities, and to some extent, investment in economies of scale. A lot of the exporters tend to be small to mid-sized in India. When you compare it to markets like China, where there are sort of government has in fact promoted large like either cluster creation or some sort of framework where economies of scale can be leveraged, right? I think in the new agro policy, the government is looking at building clusters around specific product categories where they have capabilities like warehousing, processing plants, etc. So these would be the right steps, and I think they are generally the right steps or they're steps in the right direction to promote more value-added product development in India. As such, India is not a major exporter, right? India's export to GDP ratio is far lower than most countries, right? So we've traditionally been a more domestic supply and consumption driven economy. Hence, it will be difficult to comment on the broader economy per se, in terms of, because we have generally been a domestic economy as opposed to an export oriented economy, right? However, I think the low import numbers, more recently, do tie into the exports, because India's major export products are gems and jewelry, crude oil, engineering goods, etc. And for most of these products, the raw material is oftentimes imported. So the fact that we've seen low imports coming in, is an indication that perhaps the export volume in the coming months is likely going to be lower, at least for the commodities or products where the raw material is imported. So that I think is what we were trying to establish. The fact that because of low imports in the recent months, it's likely that the export numbers are going to be impacted overall in the subsequent months. In terms of agro commodity exports and what might be the impact of that, given how things are panning out in US, Europe, and other markets, right? So I would say that it's obviously like US, Europe have probably come out of the worst, right? But when we look at like overall agro commodity exports from India, while US is still a significant market, I would say that markets like Africa, Middle East, Southeast Asia are much bigger consumers of agro commodities from India than perhaps US and Europe. US and Europe do import certain specialized products like frozen shrimp, etc. But when it comes to products like rice and chilies, etc., these products are mostly exported to markets which are more adjacent to the countries, adjacent to India. Now, of course, the effect of the pandemic on let's say continents like Africa, still like not completely understood, and we'll have to see. But I would generally say that in agro exports, just given the nature of the product, which is it's an essential product, we would generally see that things will probably stabilize in the next next 3-4 months or so.